our next guest agrees that the recovery will not be especially strong. In fact, he says we're about 5 years away from returning to normal employment. Joining us right now is Dino Kos. He's managing director over at Portales Partners and a former VP at the New York Fed. So, Dino, you kind of agree with the Fed chairman's assessment here?
Well, we have a very high unemployment rate. We need a long period of above-trend growth to actually absorb all of that excess labor back into the market. That's going to take a very long time. We have quite a few headwinds. Scott mentioned some of those headwinds now. Parts of the economy that still aren't, parts that are back to normal, parts that still have a long way to go. It's going to take a little while to absorb all of that labor. Yeah, it's going to take a few years before we're back down to, let's say, a 5% unemployment rate.
I got to ask, Ben Bernanke said that's one of the contingencies as far as raising rates. The high unemployment is a big problem. Does he not raise rates until he sees either high inflation or lower unemployment?
Well, they've laid out three things that they're looking at. There's resource utilization, so how much excess capacity there is and how much excess labor. Two, what's inflation, and three, inflationary expectations. So all three things, they're looking at those three things together. Right now, all of them are benign. Now, if you start to get movement in one or more of those, especially very rapid movement, that would get their attention. And, that might move up the timetable to begin a tightening cycle. Right now, all of those are very benign.
I mean, so then in terms of a tightening cycle, I mean, how much longer do we have before we see that, in your view?
Probably about a year.
A year?
About a year. So that's
before we see anything significant, right? Because you say exceptionally low means keeping it zero, not moving to 1 and saying, hey, that's still low.
Well, a move to 1 would be seen as a tightening. So that would be, yes, that would be low, but not exceptionally low.
So we don't get that till at least a year from now.
Well, you're going to begin to get a change probably in the language at some point later on this year. Right now we have this language exceptionally low for an extended period.
Right.
That probably begins to change, becoming more symmetric at some point during the course of this year, and then a signal that a tightening is upcoming, perhaps late this year or early the following year, and then you actually will have the tightening happen early, in my view, early in 2011. But there's a lot of other things that need to fall in place. There are operational details that still need to be sorted through.
Meaning what? Meaning what?
Well, for example, how exactly are they going to be draining the excess reserves from the system? What's the sequencing? How will they use this new power to set interest rates on excess reserves? All of these things still have to be worked through, and that's one thing that'll take some time to do.
Let's get back to the economy here. David Rosenberg, one of the things he was more bearish about earlier when we spoke with him was the consumer. And he said he doesn't really buy the retail sales increasing 1.6% last month, or at least not that it's coming from retail, from consumers' pockets, because he says, month over month, average hourly earnings did drop. But year over year, they're still up 1.8%. What do you make of the retail sales numbers?
Well, I mean, I think that they're real. There is pent-up demand. The consumer did kind of shut down in the fourth quarter of 08, first quarter of 09. So the consumer is feeling a little bit better. We do have the stock market that has, sort of helped with wealth effects. That's all. So I do think that they're real. But I think he makes a good point about income. Income growth has really not begun to grow yet. It's still flat. And so until you do start to get income growth, which will come with employment growth, it's too soon to declare victory and give the all clear on retail sales. But at the same time, again, this was a good, solid report that we had today. You can't deny that.
Now, the guys over at the, who determine whether or not the recession has ended, I mean, we heard from them this week. They said they haven't ruled out the possibility, one member of the commission, of a double dip. Where are you in that camp?
Double dips are very rare. In this case, I think it's very unlikely. I think you need to have a policy mistake to have a double dip. So that's either the Fed makes a policy mistake, you have a trade war, you have a geopolitical event that shoots up oil prices. You would need something like that,
right.
Some policy mistake or an exogenous shock to really create a double dip. But otherwise, it's just very hard to forecast.
You don't expect that?
I don't expect that.
What are you looking at, by the way, for growth? I mean, we have to get about 3% or above to add jobs. Do you expect that this year?
It looks like we're going to get it in the first half of this year. Again, there's a lot of momentum. I think the second half will get interesting. State and local municipalities are going to be raising taxes.
It's also another one of the big problems that Ben Bernanke mentioned,
right, exactly.
the state and local finances.
And this is something that a lot of people, I think, are underestimating. This will be a drag. I mean, I live in New Jersey, so today you saw New Jersey Transit raising fares. That's one of the sort of,
Is it worth it, do you know?
Yes, it is. But I think the point is that there's different ways that consumers will be hit with fees or taxes. That will sort of create headwinds.
Can they manage it, though, consumers, in your view?
Sure, they can manage it. But I think, again, the question is, what does that leave you? Does that leave you with a 4% growth or something less? I would say that it's something less. Not a double dip, but something less, because, again, it'll be an ongoing headwind that will sort of put a drag on the economy and a drag on job creation.
Dino, thank you so much for coming on. Always a pleasure to talk to you. Dino Kos there from Portales Partners.